What's going on, everyone? Happy Tuesday, November 1st. Rent is due. Unfortunately, it's a sad day in the hip hop community. Prayers go out to the family, amigos, and everybody affected in the senseless act of violence that has taken his life at such a young age. Definitely an unfortunate situation. But of course, we're here today. I wanted to bring you to Trader today with one of my favorite companies, and really my favorite companies because it's one of those things where they're branching out in so many ventures from starting out with a bookstore, Amazon, right? Think about it. I'm an Amazon Prime member. I don't really shop a lot on Amazon, but the footprint that they're making, they acquired a self-driving car company. I think it was Zooks and whatnot. Of course, they acquired MGM. It was like a catalog and whatnot. You have Amazon Prime, you have music. What I love, they just recently announced a $150 million fund. They want to start investing in outside venture firms. So what they're going to do, their goal is to invest in 10 funds through 2023. So they're getting into that venture capital realm, which is huge because all they need is one unicorn, and 150 million can turn into a couple of billion. So I love it. Not to mention, they came on my radar when I was doing some research for the travel club. And in 2019, they were second in corporate travel at $500 million. Then, of course, that next year, COVID hit. They actually led the way. They were behind Deloitte, but they spent the most in 2020 on corporate travel. It went from 500 million to 100 million, but they were still number one. They employ 1.6 million people, and of course, that number is growing. So yeah, they have a really big footprint. I love what they're doing in regards to the grocery store industry with Amazon Go. Um, Definitely had an opportunity to experience that, and it was very cool. The technology is so cool. You insert your card when you enter into the grocery store, and you literally just pick up anything off of the shelf, and the technology knows what you're picking up. That's just crazy. So I definitely believe in the company. I believe in the longevity of it. And everything that they are entering in regards to industries, it's very sustainable, in my opinion, for a few years to come. Everything is cyclical. Businesses and corporations are cyclical, but this is Amazon's time. With the most recent stock split, the stock price is definitely more affordable. Stock price is down today, $4 and some change. But no worries. Like we said, this is forward thinking. This is longevity. This is, you adding this to your portfolio. So once again, what I'm going to do is show you, as always, this is my goal. Whether you're bullish or bearish, these are ways to leverage either stock or options contracts in order to carry out your bias. So as you can see, this bumpy road here going back from last year. But this is a 2-year chart right here. So you just see that bumpy road there. So let's get started. You can go out as far as 808 days, whether you're bullish or bearish. I'm very bullish on Amazon. So typically in my case, if I'm trading the option, I'm going to either sell a put, I'm going to buy a call. But you know me, I'm a seller. So I'm always looking to sell. The most easiest way to carry out your bias is just buy stock. You can just buy the shares, wait for the stock price to go up. But if you want a higher return on investment based on the capital invested or based on the capital pledged, you definitely want to use and leverage options contracts. Like I said, when we're looking at the options chain here, there's no particular time that I'm endorsing. I do want to backtrack and say that I'm not a registered investment advisor or broker. This is just information that I'm given based on my research. Okay. So with that being said, of course, I would like for you to seek any professional help from a registered broker advisor, accountants, not accountants, but any of your investment advisors. So yeah, let's get into it. So like I said, I'm bullish. So this is something that I would do. I'm just gonna go 45 days out. That's usually my route when I'm trading options. I will say if you go out 808 days, you got some good volume here, good open interest. You definitely want to look at open interest in the thousands because that's going to let you know if your position, if you can get in and out very quickly. So that's considered liquidity. Liquidity is king when it comes time for trading in the market. Because if you don't have a lot of traders, it'd be really hard to buy a buyer for a seller and vice versa. So you definitely want to look at that. Now, we can go out 45 days. Like I said, I'm very bullish on Amazon. Stock price is down today. So I definitely want to sell or buy into the weakness. And when I say buy or sell into the weakness, just basically saying, okay, that decrease in stock price, we're going to take on the bullish position. And that's all it is. Now, typically when I'm selling options, I always try to sell in the sense where we're right below the stock price. And that's just me. That's not advice. It's typically just my strategy. This would be a good time for me to enter as well because IV, implied volatility, is pretty high. So that allows me to collect a higher premium relative to it being lower. Of course, that IV lets you know if option prices are higher or expensive or cheap. In this case, we would be able to sell this product for a lot more, right? So if we were to go $5 wide, shorting the 95 strike, buying that 90 strike, bullish position. We're just betting that the stock price is going to stay above $95. Now, because we have a defined risk trade or defined risk strategy, and also because we're selling, if I were to collect that premium at 168, you can take away that 95 from the 168, and the stock price can dip to that, and we'd still be profitable. That's the good thing I love about selling options. So even if it were to break that short strike, we still have some leeway in regards to being profitable in this position. So you can sell that put if you're bullish, still want the stock price to stay above $95. Another bullish position, like I said, we can just flat out just buy a call. Let me change this here. Oh, we can just flat out buy a call. We want the stock price to increase. Now, the only thing we're buying a call, so for instance, you see this debit that we're paying $785. Of course, we're going to need that stock price to move about $7. So you see around here where that $7 or $8, you see where this green starts. That's because the stock price is going to have to move to clear this gray area before you even get your debit back. So that's another con in regards to why I don't buy options. But at the same time, every strategy is different. This works for people. I know in 2019, call buyers were making bank. They were making bank. Some history record highs, right? I mean, anybody can make money in an up market, right? That goes without saying. But yeah, so that's another bullish position there. So I'm bullish there. Like I said, you can buy the stock, sell a put. Those are two of my favorite strategies. If you are bearish, no matter what time frame you are, no matter what time frame you're in, of course, go ahead and sell that call. With you selling that call, you want that stock price to stay below a certain price. You can adjust your strike prices here. So like I said, those two bullish, only the two today, the two bullish strategies, or three, excuse me, you can either buy the stock, you can sell a put spread, or you can buy a call. Those are the three that I'm gonna keep it at today. I'm also gonna keep it to 3 on the short side. In the short side, you just want the stock price to decrease. If you want to take a little bit more risk, you can go closer to the stock price. It's up to you. You can add an extra leg where you can cap that, and of course, you add that spread. This here is selling a call. You can simply buy a put. Two simple, easy ways, or you can just short the stock itself. Those are 3 simple ways that you can short it if you are bearish on it. Like I said, I'm not endorsing any strike price. I'm not endorsing any time to expiration. This is just simply me showing you those strategies to carry out your bias, whether you're bullish or bearish. Like I said, I love this stock. I'm bullish. So in my case, instead of me just buying stock, if I didn't want to buy stock, I would short a put. And that short and the put is going to get theta on my side. It's going to allow time to pass, and I'm able to collect that premium no matter what. The stock price can stay the same. The stock price can go up. It can even go down a little bit. I'm going to be profitable in 3 out of the 3 directions. As opposed to if I just bought the call, I need the stock price to go up. I can't afford for it to stay stagnant because I need to get that debit back, right? It's like you invest in a home, you renovate it, so you got to put some cost into it. You're going to need that value, that market value, to increase to at least get your investment back. So that's would be the equivalent to buying a call. But when it comes time for you writing options, you selling premium, it can go up, down, or even decrease just a little bit. And that's what I love about it. Let me know what you think about Amazon. Are you bullish? Are you bearish? What are some of your favorite things about the company? Thank you for your time. Don't forget to like and subscribe, comment, give me feedback. Let's chat. Let's talk. Let's learn from each other. Peace.